Hello and welcome back to Dukascopy TV. Today I'm joined by Natasha, Giles and Assad Mahmood from Capco, and we're talking wealth management solutions. Thank you both for joining me today.
Thank you.
Thank you.
Now firstly, is this squeeze on margins of traditional asset management, is it causing traditional companies to look elsewhere for new solutions for servicing their clients?
Well, yes, actually, because clients really are a little bit dissatisfied in the market, and with the financial crisis, they've been looking for alternative solutions. And for the wealth managers to remain competitive, they have to constantly be bringing in new products and services. So we're even seeing companies such as Barclays, which have been launching new online trading platforms, even into the product expansion with Forex margin. So we're really seeing an expansion now on tradition coming through into more, I would say, innovation, I guess, and alternative platforms. Yeah.
And does this include new technology? How much is new technology influencing these services? And would you say it's causing users to be able to go on and find their own means of trading?
So I think the biggest impact today is that we can clearly see that functionalities in web functionalities that was once available on desktop application are now available on as a web platform. A few years ago, only desktop application was able to cope with the processing time needed to actually display and also the response time that was needed to process the transaction. Now with web and frameworks, the web platform is also available to do the same type of transaction and functionalities. Software developers also develop custom protocol that allows the trades to be calculated in milliseconds on a web platform. That's also was impossible a few years ago. Of course, the tablet and touch screens in general higher the expectation of the users, as a 15 clicks to get a functionality is no more acceptable for the user. They're also expecting very high uptime, being able to trade anywhere, anytime with any devices. Features like that used to be nice to have are really now mandatory, and if the client is not getting those functionality, he will simply get to another platform.
I see. So it sounds like it's come on leaps and bounds, but is there still this traditional value for money? Is it still apparent, and are these companies really trying to make value for money foreseeable in the future for their clients?
Yes, certainly. Following the economic crisis, there was such a loss of trust in finance that actually there's been several regulations where now they have to declare far more information about the fees for the value that they're for the service that they're receiving, and in that is making clients demand more information now about what the service is really worth. So because for products such as mutual funds and for structured products, they're now having to declare where the financial advisor is receiving revenue. It's no longer hidden in the price, so the client becomes far more aware. And the reaction from that is that the clients become more and more demanding for seeing where do they pay for something and where are they receiving the best value. And interestingly, it's not necessarily that the clients have all rushed off to the cheapest provider. In fact, brand and reputation are really important. So in fact, clients have become much more, I guess, subjective about saying what is value for money for them.
I see. And in such a competitive industry, how important would you say conversion is between these traditional providers as well as new white label partners? Mm-hmm.
Well, we've got, in the wealth management market even, in fact there's massive changes in the underlying client base, because with new regions growing faster than others, for example like Asia, they're not so interested in this whole relationship management style of service. So in fact they're demanding for more and more tools and online trading platforms. So for any wealth manager to remain competitive in the global market, they have to provide for these tools as well. And that's really where we're seeing a convergence between the bigger companies and the smaller niche players. And of course the obvious part of that is there's no need really to build in-house anymore, because there's so many offerings on the market. So I don't know if Assad wants to say a bit more about the technology. Innovation
is no more coming by big players, it's also coming from the outsiders. For example, tremendous UI, intuitive charting, trade from chart, impossible response time. We even saw a vendor the other day that was actually trying to build a Forex fund by client to client. The client can subscribe to the funds, I mean, if they like the strategy, and then this fund is traded as an ETF within the platform, and all that in real time. This is quite groundbreaking to me.
Yep. And so what we're seeing now is from when we're providing information or advice on the topic, it becomes less and less, I guess the benefits become less and less to build in-house. It's more and more about going outside, and then the quicker time to market, getting the solution out, especially important in this competitive market.
So these strategies are really changing, aren't they? Progressing and moving forward.
Absolutely. It's not the same as it was like 5 years ago. So absolutely.
Well, thank you very much, Natasha. Thank you very much, Assad, for joining us in the Dukascopy studio today.
Thank you so much.
And that's all from us here in the studio. But if you want to keep updated on the latest financial topics, just click back to the Dukascopy website. Take care.